Welcome, everybody, to the Chinchilla Pickin' Podcast. It is May the 11th, 2022. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. Good evening. My name is David Underwood, and once again, I'm here with Brandon Beaver. Brandon, how are you?
I'm good. How about you?
I am doing well, man. You don't say I'm good. You say I'm doing well.
I'm doing well.
It's the King's English. Come on. No, I'm just kidding. I am not one of those grammar people, although some people might say I would be, but I am not. I don't know why. I have always just, known to say I'm doing well. Now, I was grew up, father was in military, lived overseas, and our Air Force bases, military base, born and raised. And we always were told to say doing well. I don't know. I don't know if that's a thing or not a thing. Who knows?
I am well. I need to bring the microphone up to me.
Yeah, I can't hear you, man. What are you saying? Anything at all? It's been a crazy day. It's been a crazy day. One thing I mean, there's just so much to talk about. There's so much news. There's a lot of discussion to be had about different things. I mean, I did a buy today.
I did yesterday.
Yeah, I mean, there's a reason for why I did a buy today, and I'm sure there's a reason why you did your buy yesterday. And so we could talk about those, but let's go over the rules, and then I think we want to get into it, man, because there's just so much news. Everybody listens to us. Like we follow you guys. We track when you guys listen to us, and when there's a lot of news, negative news, and the markets are down, you guys typically come in 20% more listeners, and we want to make sure we're giving you what you want. Right? So you guys want to know what's going on in the market right now. Let's give you that. So rules are Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. We do not discuss it. That way you hear the live discussion here on the show right for you. Brandon, I'm going to give you the floor first on deciding which way to go here, because we've covered a few different topics, but you go first.
I want to ask you a question, actually, and I bring this up prior to the show because I almost forgot about it. What are you doing about Twitter?
I am holding. And if you're asking what am I doing about Twitter if I hold through the buyout?
Well, no, now, because now people are saying it's about a 50% chance that he'll be able to go through with it. Some of the financing is going to come from his selling of Twitter Tesla stock, which he already did, by the way. He's already sold it, but then there's the concern that he might have to sell more. And what if he has to sell it at a lower price? Will he be able to complete the acquisition? If there's a credit crunch, will he be able to secure more financing? Those things. And some people.
Well, I mean, hold up. There was who's the CEO of Oracle? He does a lot of sailing ventures and everything. Larry Ellison. Larry Ellison.
Yeah, there you go. Yeah, very, very intelligent guy.
So Larry Ellison's also putting up for some of his money and some of his stock.
Yeah, I saw that.
To go by. So he's a partner in this with Elon.
Yeah.
So Elon's not the only billionaire that's involved in this one. There's two of them, and I think Larry Ellison can raise the money if Elon can't.
I agree.
So as far as the financing between two billionaires that are on the top 20, top 10 billionaires in the world,
Elon was the richest guy in the world. I don't know if he's
Elon is. Larry has got to be. He's like 28, 30 billion, something like that net worth. I mean, between the two of them, they ought to be able to come up with the money to buy Twitter.
Yeah.
So I don't see I don't see that falling through as far as finances. Now it could fall through for other reasons, but not finances.
The SEC investigation, they're investigating him because they're saying that he broke the law. He didn't declare that he was planning on raising his stakes in Twitter past that 9.2% or whatever it was in time. I think he declared it. That he raised his stakes 2 weeks too late or something like that. But that I don't think that's going to make a difference in this acquisition. I think it's going to be a fine. They'll slap him on the wrist and he'll move on. Or maybe they won't slap him on the wrist, but I don't think that is any reason to block the acquisition of Twitter.
Yeah, exactly. So I'm holding my stake in Twitter. I haven't been watching. I've been so confident that I haven't even been watching it, to be honest, man.
What about
I've been looking in other areas.
Activision I added to yesterday.
Nice. Well, I mean, come on, man. These are good moves by us. I'm not concerned about Twitter, but I thought you were asking like, am I going to hold through the buyout and get a piece of equity at the end?
I might.
And last time we talked, I said I might. I don't know.
So it all
I don't
depends.
know.
Like the plan is for me right now to do so, but it depends on what the shape of the economy's in. When he takes it private, if he takes it private and more in a recession, the new IPO might not be for a long time. And if he does try to IPO it during a recession and a depressed market, then we're not going to get that much money out of the IPO. So if we're still and well, I think we're probably in a recession right now. We just don't know it. I know we haven't seen the second quarter numbers yet, so technically we can't be in a recession, but I think we're in the middle of it. With that being said, if we're still at this point, we're still, seeing declining GDP and all that, then yeah, I'll probably take my profits before but we'll see.
I'm with you. I'm with you. So let's talk about that since you mentioned it, recession, man. What is the definition of recession now? I know you know, Brandon, but I'm going to read the definition here, from the dictionary, if you don't mind. A period of
hold on. The dictionary definition of recession is going to be when all of the apes and the meme stock people cry themselves to sleep at night.
I don't think that's it, man. I don't think that's it. That's hilarious. It is actually a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. So that means GDP numbers have come in decline for 2 quarters in a row. Thus, we are now in a recession. So 6 months of decline. And then how long, recessions can last, 6 months, a year, and so on and so forth. So,
well,
given that,
back on March 28th, GameStop was at $189.59. It's now down to $81.80. So we still got some room to run before it's down below $5 and the market finally bottoms.
According to Brandon's recession tracker, right? Do we all have to subscribe to this?
Yeah.
So given that definition, man, do you believe honestly right now that we are in a recession or in the beginning parts of recession or what, or how would you describe it?
I think we're in the middle of it. And I don't think it's going to be as pronounced and as crazy as a lot of people think. I could be wrong because inflation is, we added a lot of money to the economy, a lot of it. And what happens when you add a lot of money to the economy? You don't create new wealth. You devalue the value of the currency in question, and you wind up having to pay it back through higher prices. And we talked about this 6 months ago. We warned that this was going to happen, and we didn't know the Ukraine war thing was going to happen. We didn't know how long the supply constraints were going to last. But this is all perfect storm for inflation that's driving prices higher. And I think that the increase in the monetary supply has a lot more to do with it than people think. So we'll see what happens. I was looking at the .com bubble, and we do have a few stocks and had a few stocks that were trading at unreasonably high levels. Not as many as they did during the .com bubble, though. Not nearly as many. And the euphoria wasn't nearly as crazy. I would replace the .com stocks with the meme stocks. And some of the work from home stocks, maybe like Zoom was there before, but that's came down a lot already. Peloton, all that stuff that's already dropped. I think that the market has been in a bear market for a few months now, and it just wasn't shown in the S&P 500 or the NASDAQ, which are reweighted to show their best performers. And I think that the stock market, honestly, is doing a lot worse than it looks. So if you're one of those people right now that's down 30% for the year, don't be depressed over it. Don't kick yourself in the butt, because that's a lot of investors right now. And just because you see the S&P 500 is down 11%, that I don't think that really is a good indicator of all stocks at the moment.
Well, all right. So
what happens to NVIDIA? What's happened to that and Tesla and all these other ones, high flying stocks right now?
Here, all right. So you covered a few different points, and I want to piggyback on them right now. First is, if you're down right now, if you're down in your 401k, don't worry about your 401k is going to bounce back. If you have an IRA, 401k, a mutual fund, any one of those things, just let it sit. It'll come back. Don't worry about it. This is not my first recession I've traded through. This is, I was trading stock during 2008, 2007. So those will all come back, right? If you're in a company right now, you're invested in it. So if you're invested in the company and you believe in it in the long term and you believe in the fundamentals of this company and it's going to grow, you can, and you're down right now, I see a good opportunity to add more to it if you can. If you have an extra $50, $100, throw it in there, $1,000, throw it in there.
Let me piggyback on that. The risks that are taking down the market right now were in the market a year ago. They just weren't priced in. Now they're being priced in, and we're probably overshooting to the downside. And to me, that's making the market look more viable. That whole buy low, sell high kind of thing. You have to have courage and you have to have conviction to do it. But you need to buy when there's blood in the streets, and there's blood in the streets right now. And it may get crazier, it may get worse, but you're getting at a lower level right now than you would have bought, at a year ago, or even 2 years ago, in some cases 4 or 5 years ago. And you're probably getting in at a lower level right now than you'll get in 2 years from now.
Right. So I mean,
if you've got a long-term mindset about it, why not? But hey, look, if you're afraid of certain companies, if you're afraid of buying individual stocks, maybe every month you buy SPY right now. Every month for the next year.
Right. Buy another share of it every month.
Yep.
Or whatever you can afford. Right. I like it.
Even if it's fractional.
Yeah, I mean, right now is a good opportunity to get in on solid companies. And I'm going to refer back to this article I was reading today, and I read it to Brandon, so he already knows what I'm going to talk about. And this is something that Brandon has mentioned before in the past. I want to bring it back up to a forefront of minds here, guys. But there's an article, and I was reading on fidelity.com, but it was actually by Nellie Huang of Kiplinger. And this actually came out in April 27th, 2022, if I could say that. It's talking about what companies to buy, like 5 stocks with bulletproof profit margins. So it's looking at profit margins, who can eat in the inflation and still have a good consumer base. So in the article, they talk about, think like Apple or Nike. These types of companies can pass on higher wages and material costs to customers by raising the prices for goods or services without seeing much slip in demand. They also go on to, mention companies that can control costs, such as Johnson & Johnson. They can control costs. And there's a lot of different examples in this article about what to look for in good companies. But I like how they were talking about looking for companies with profit margins, ones that can eat and take this hit in inflation that we're seeing right now and continue to get customers and consumers in. Brandon, you talked about this a bunch in the past. Any thoughts on that article and, how it applies to today, how it applies to right now?
Well, it's playing out the way that we expected it to. Apple's sitting on a ton of cash, like a mountain of it. Was like $90 billion in cash.
Yep.
Yeah. And people need their iPhones. At least they think they need their iPhones.
Well, they need the Apple services at least, if not new iPhones.
It's almost become a consumer staple.
Right.
You buy those big brands. Look how Coca-Cola is holding up right now. I know we got reopening right now, but that's another one of those consumer staples. I don't think I'm buying it at these levels, but it's surprising to me that it's above 60 still. And I mean, it's a little surprising. It shouldn't be, because it is a consumer staple. It's a grocery, but it's also reopening stock. If that comes down a little bit, you buy that on the dips too. Buy those big names that make all that money. The Microsofts, the Apples.
I tell you what, and I know so many different traders right now, and I'm going to steer off here and then you'll see why it all turns back to what we're just talking about. But I know so many different traders right now, some that are down big on certain investments, some that are making money because they're doing puts every single week on companies right now, and they're just making 30-40% a week, and they're sending me snapshots, and I'm like, good for you, man, go.
I really wish I would have bought a put on Robinhood.
Right.
I look back at it, I was an idiot not to, because I knew what was going to happen. I should have just let it play out. But
so I mean, you get those, and then you get new investors that are actually listening, that are that are buying like a share of Apple every single chance that they get right now and building a position in Apple. I know someone who's doing that as well. And so there are lots of different investors and traders out there that are on all kinds of different positions. And, the guy who's doing puts right now on every stock, yeah, he could be making money right now, but as soon as the market turns, he starts losing money. He could lose 80% in 1 week. The guys that are down big right now, if they sell because they panic and they need that money to pay the mortgage, well, then they didn't balance their budget correctly outside of their investing money. They got to be separate. Your monthly budget and then your investing has to be separate. And so that's poor budget. It seems like the person who's in the best position is the one who's currently adding a share every time they can afford it to their position and growing the position for long-term investment. Right now is a good time to get in and do that.
I played a lot of options during the COVID decline and rebound because that was easy to do.
It was easy. I mean, I did too. I hardly ever play options, and I played a huge option on ExxonMobil.
Yeah, you throw a put on the live event companies like WWE or Live Nation, things like that. Of course, those companies were going to decline. And then Amazon was getting its butt kicked. And then I'm like, wait a minute, we're all getting stimulus checks and we're all sitting at home. Why is Amazon going down? So I started playing calls on that. But then it became less obvious. This time it's not so obvious to me I mean, Apple is holding up, but do I think it's going to increase drastically over the next 3 months? Probably not.
Right.
And,
I'll talk about my trade I did today. You know what I'm talking about. And it has to do with that is, so the Bitcoin went below 30,000 today. For me, that's a big teller of like, okay, it's time for me to really start building positions somehow related to Bitcoin.
Because a lot of people think, oh, now it's time to sell. No, because when the price is coming down and the bad news is priced in, then there's less risk over the long term.
Well, I mean, a lot of the banks too hold positions in Bitcoin of between 25 and 30,000. They don't want to lose their money, and they have the money to move it.
Yeah.
Right. And so it dipped below 30. So I went in and I bought Riot today, but I only went in with half of what I had allocated to buy for Riot. So let's say I had $100, which, of course I had more, guys, but I'm just going to use this as an example. I had $100 I said I was going to use to buy Riot. I went in there with $50 today. And the reason is I think there's more downside, but just in case I got the bottom accidentally, I wanted to make some profit. So I bought in with half my money today, and I'll probably buy another 25% if it continues to drop, and then the last 25% after it drops some more. And that way I've built my position in this company. And then as soon as Bitcoin rebounds, I don't need it to go back up to 50, 60,000 for me to make money.
Yeah.
I only needed to go to like 35, 40,000 and I make a ton of money. And so that's all I'm really looking for in this Bitcoin bounce there. So that was a move I made today in Riot, RIOT. If you guys wanted to follow me in that move or not, I don't know. But I put half of what I had in there today. And I thought that I'm going to make my money when the economy starts turning, the stock market starts turning. I will start making my money back on that.
And when you're buying a stock like that, you've bought the stock. You don't have a time limit on it like you do options.
Right.
One of the reasons why I'm not playing options right now, because I don't know how long this recession is going to last, which I'm calling it that right now because I think that's what it is. So I don't know how long it's going to last. So I'm not going to play options. There's no theta decay on buying a stock either. So you got time on your hand. And if it happens in a year or 2 years, then that's fine. And you can continue to average down and buy more, and increase your likelihood of making a profit on the way. I'm not personally buying Riot myself because it's not my kind of stock, but that's just how you would do it if you find a stock that you want to buy.
What did you buy yesterday?
Activision. Bought more Activision.
So you just added to your position, right?
Yeah. So I realized that I was a little underweight and I wanted to be equal weight. So I bought some more shares.
So all right.
It was a good time to do it because it was down. So.
I'm gonna pull Larry Kudlow here and say, all right, for not everybody here has a master's or doctorate degree in stock trading terminology. So can you explain equal weight, underweight?
So
just in case we have a new trader listening.
Like how much do you want to devote to this? Because there's many different ways. It's kind of subjective and it depends on your risk tolerance. So what do you want? Do you want, like, if you're looking at your own portfolio,
quick description.
If you're looking at your own portfolio, do you want to be overweight risk in high flying growth stocks, or do you want to be underweight those? And so just in a basic level, if you're saying I want to be equal weight growth and equal weight value, you'd be 50% growth, 50% value, right? Well, if you got a basket of 8 stocks and you want to be equal weight on all of them, then you own a very similar percentage of every single one of those stocks. It's not going to equal out if you're not buying fractional shares, but you may have 25% in one, 24% in another, and so on. But that's equal weighting your stocks. I had like 10% of my portfolio of my stocks invested. I had 10% of that in Activision, and I wanted to be closer to 20. So
look at that, man. Look at that. I love that. That was good. That was good definition, man. You should start giving classes. By the way, if you want us to come to your college or university, Brandon and David are available. Chinchilla picking. Go ahead, DM us, ask us, and reach out to us, and we will show up. We will throw up a tent. We will put up a banner, and we will post something like, hey, this stock's going nowhere. Change my mind.
I think Activision's I think it's an incredible deal right now. I think
it is an incredible deal.
Go through. And if this was happening to, a year ago, we'd be trading near like $93 right now because they're buying it out for $95. Microsoft is buying them out.
I wanted to go back to this recession thing. I believe we're in a recession as well. But I also want to talk about some of the headwinds here. And I lost the article. Now I'm gonna have to go off memory here. Here we go. 41-year-old's memory. How's it gonna work? So I was reading this stock, and I was reading on fidelity.com under news and research, and this story, if you will, not stock, the story was talking about how the Fed was worried that inflation, their rising rates, is not going to have big enough on inflation because the average U.S. household has historic levels of debt, but yet they're still spending. So they're not slowing the households from spending money. And so raising the rates is not having the desired effect, is what Powell said in the article. And he's saying that's one of the reasons why we're not seeing raising rates work its magic like it's meant to. Wait,
hold on. He's contradicting himself, because just a few months ago, he said that the inflation was mostly caused by supply constraints in Russia. And
I know. This is why I wanted to get the article, because I wanted to read exactly what it said. But yeah, you're right. He is. He's 100% contradicting himself.
So now it's about the increase in the monetary supply and people spending all the extra cash they have.
Right. Yeah. It's. I'm not a fan of Fed Powell. I don't. He should have started raising rates long before now.
That's my problem with him, because he had the sense to know that he needed to do it, and now he's going all Paul Volcker on us, and he should have done it months ago.
I mean, we called this last year at this time. We were talking about how this is what you even laid out the plan and said, this is what's going to happen. We're going to wait until next year to start raising rates. And because of that, and you called exactly what's happening, and this is happening right now.
He's waiting to be renominated.
Yeah, it's frustrating because you feel like it's political. We don't want to have any, we don't know for sure or not, but you feel like there is that atmosphere to it, and you shouldn't be playing that with people's money. Nonetheless, he's saying that Americans are still spending and that they're okay with having historic levels of debt. And here's my thing is, I'm not okay with Americans having historic levels of debt. I'm not okay with Americans being underwater on a car loan because they kept trying to get a better car without paying off the last one fully. I'm not okay with Americans needing a firm to partner with Amazon so we could buy stuff online. Like, you don't need it if you have to go through a buy now, pay later program. That, I don't know. Maybe I'm just old school when I come to my household budget, if you will. But I believe that you should live below your means and, not purchase things if it's not necessary.
I haven't had a car payment since 2008.
Right.
So I've only had one car payment my entire life, and I'm done with that.
I see, Brandon, I think you and I are just in a different place than a lot of other people, but I worry about the American consumer because we're in this. And if the actual recession that we think we're seeing right now, plays out, that means we're going to feel it on Main Street in 3 to 6 months. That's when we're going to start feeling it on Main Street. You're already seeing layoffs at major companies. Right now, it's companies that aren't doing well. They're the first ones to start the layoffs, right? They're the ones that are hurting the most and they're quickest. And they're the ones that, you have to look out for that may not be here at the end of the recession. So you got to watch out for that. But when I start seeing these headlines and everything, then I start getting a little concerned. I start worried that, we're going to get into where there's not enough jobs. Right now, there's jobs everywhere. Soon you might not have enough high paying, high quality jobs that everybody wants. And the only jobs people are going to be able to get are the ones that nobody wants.
So here's my hopeful case here. Unemployment's at 3.9%. If a recession brings us to 5.5% unemployment, that's not, we've had a lot worse than that. So, or maybe even 6%. I'll take a 5.5 to 6% recession over the alternatives any day. We don't have to have a great recession of 2008 and have a 10% unemployment.
I think it got as high as 15%. I remember.
It probably did. Yeah. And it was 9%, and then it was 9% for like 2 years.
It was high. Yeah, you couldn't get a job.
So it doesn't have to go that high. We could have a situation where it's only, 5 to 5.5%, which is what 5 to 5.5%, by the way, is what economists used to consider full employment.
Because that 5% is just people either coming into the job market, leaving the job market, or transitory in between jobs in the job market.
Yeah. So it's worse than where we're at right now, but I mean, I don't know. I think we're pricing in a depression that might not happen. It could, but
which again comes back to opportunities to go ahead and find value companies that have a good profit margin, that are able to withstand this and are going to be just fine on the other side. Like, Apple, Nvidia, I believe both of those are going to be up there on the other side doing very, very well. I'm in both of those. I'm not in Apple. I'm sorry. My daughter's in Apple. She's the one that buys a share all the time, but Nvidia, I'm in Intel, I'm in companies that I believe are going to be stronger on the other side of this.
If we do have a great recession, then we might have the S&P 500 at 2000, but we'll get out of it. We'll come out of it on the other end. If we elect a socialist, then I might become a full-time bear here. But
look, if we go deeper into this, and it's just going to present more opportunities to buy strong companies that are going to be here afterwards.
Yeah.
Given my experience in 2008, the last great one we had, if you bought when everything was tanking, man, you made a ton of money on the other side.
Yep.
A ton of money. I remember Fifth Third, stock was at $1.50, and then 2 months later it was at $9. That's just one example of a turnaround that happened after we bottomed out. Like, you could have made vast amounts of money very quickly.
Yeah.
If you bought when everything was tanking and everybody was scared.
And if you waited until the media told you to buy, then you missed most of the run.
Right. You missed the big turnaround, and so that's what we're saying. Look for good companies. Don't just buy anything. Don't just throw your money out there based on some guy who said, well, I saw this on so-and-so, and StockTwits was saying this, and the Motley Fool guys were saying this, and Bazinga, and all these other, and they're great resources, guys, but do your research, look into this and figure out what actually is going on in these companies. Read the reports, listen to the calls, and take your time with it.
Yeah. So just take a step back and try to figure out where we're at in the market. And at any given time, if you're listening to this a couple of years, even in the future, think about what the media is telling you to do, because if the media is telling you to buy and everybody's crazy optimistic about stocks, then it's probably time to start raising some cash. And when everybody's freaking out and fearful and overdoing it to the downside and sell, you know who I'm doing there. I won't then maybe it's time probably to start dipping your toes back in the water.
You know, his lawyers are already reaching out to us about that. So just FYI. All right, guys. Final thought or call or not call or anything, Brandon?
Activision. I'm saying still buy it. I like Twitter. I mean, you're a little bit more risky on Twitter, but I'm still in it. I'm still going to have it. So, but definitely Activision. You know what? I'm thinking about buying more of RH soon, but we'll see. I know it's discretionary, but man, that thing's been beaten down so much.
That's very discretionary. And if we're in a recession, you know, I don't know, man.
Well, that's what everybody else is thinking. So that's why the price is getting better and better and better and better by the day.
That's true. That's true, man. And that's what we were just talking about. Or
do I wait for a bigger dip on Apple and Microsoft? That's probably even a better case. Or maybe I wait on SPY and I just start buying SPY every month, like I talked about everybody else doing. I don't know. I'm going to think about it in the next couple of days. I'll let you know next week.
Right. So SPY, guys, if you don't know, that's SPY is the ticker symbol. It is we say it's a fund ETF. What is it?
It's an ETF that tracks the index fund, the S&P 500.
There you go, guys.
And it tracks it pretty accurately. There's a lot of ETFs that are supposed to track index funds that don't do a very good job, but SPY is probably the best one.
So SPY, yeah, I'm with Brandon in this. Buy the ones that you know are good or solid are going to be here on the other side of it, and hold your positions. If you're in them for investments, you know they're going to turn out if they're strong, solid companies. So do your homework. You'll make money, man. You will make money.
Sorry, I keep talking over you. I'm sorry, but
it's okay.
If you buy now and 3 months late, 3 months from now, we're deep in a recession. You may look like a complete idiot and feel like an idiot, but in a year, you're going to look like a genius. 2 years,
right?
So think long term.
When you have those 40-50% returns because you held, they're going to be like, oh, wow, what did you know?
Exactly.
And I listened to that Dave and Brandon guy on Chinchilla Bick, and they said to hold. But there you go, guys. As always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.